these governments are desperate for revenue, and they're going to do whatever it takes to take your wealth away, because governments, of course, don't have any money. And I do have to admit, maybe the Trump administration isn't as blatant, but that's what devaluation and debasing the currency is. The same thing. It's a kind of wealth confiscation on the sly. Very few people notice. I think it was Lenin who said that yeah, inflation is something that very few people understand. Only 1 in a million do, and it's a way to basically destroy the bourgeoisie. Saturday, May 24th, 2025, Maneco 64, home of alternative economics and contrarian views. Well, today we're going to look at the Secretary of the Treasury, Scott Bessent, and how, in my opinion, he's green-lighted a weak dollar. And we're also going to look at some charts, and the gold chart is telling me we could be at around 4,000 by mid-October or so. Yeah, just a little forecast. It doesn't mean to say that it will happen, but nevertheless, I think gold and silver are going to remain strong. And I'm also going to talk about how devaluation is really a poisoned chalice. It's not a positive for the nation. Before I start, just want to ask you to comment below whether the volume or my speaking sounds okay, because I've bought a new microphone. I bought a new phone with which I do record my videos, and I've had to change the setup. Let me know how it sounds, the sound. Yeah, I want to start with devaluation as a poison chalice. And here I'm going to go back in time in my history, so you will know a little bit more about me. I was born and I grew up in Brazil, and yeah, I'm not an American. Some people comment. I saw a comment yesterday, oh, we've got an Englishman and an American, when I was speaking with Clive. Yes, my accent is like an American, but I'm originally from Brazil, and I was born in 1964, as you might have already figured out by the name of the channel. And yeah, I lived through a lot of inflation, loads of currency collapses, new currencies being brought on. Yeah, life was okay. It wasn't the end of the world. I was lucky because I grew on the right side of the, let's say, economic sphere. I mean, my dad, he started from very little, but he did very well, and his business made it so that he earned in dollars. It was an international business, so things were fine. But the currency in Brazil and other third world countries, if you look at them, there's no third world country that has a sound currency. Because after the World War II, the strategy was to substitute imports, so they try to grow their own manufacturing, these countries, a little bit like the US is trying to do, bring back manufacturing now. And eventually, as well, they were dependent on commodities that fluctuated a lot, and they went into a lot of debt, IMF, World Bank, and eventually they had to devalue their currency. That was a way to be able to carry that debt. And why is it a poison chalice? Well, because it looks like you are exporting a lot more. But the country is actually getting poorer because the currency that the majority of people use is losing value. And that's why in countries like Brazil and other third world countries, there's such a disparity or wealth inequality. And there's very little middle class as well. You either have a lot or you have nothing. So that's why I say this policy of devaluation, and it looks like Bessent is okay with it. And we're going to look at an article here that talks about it. I don't think it's a good thing. It's going to benefit more the people who have a lot of assets, the very wealthy at the top. Hopefully it will benefit you if you've been watching my channel and you've been trying to put a little bit of gold and silver, physical gold and silver aside. So that's why it's a poison chalice. So when people like Deutsche Bank, for example, are saying things like 40% dollar drop could erase U.S. trade deficit, that's Deutsche Bank, and erase rehypothecated shorts from the planet, from planet Earth. That's VBL Ghost, or Vince Lancy, who said that, and he's talking about the gold shorts. And I replied to that and I said, and turn the U.S. into a candidate for third world status. So I'm not saying the U.S. wants to devalue by 40%, but the fact that Deutsche Bank is talking about it is something that is probably out there. And looking at things yesterday, following the markets, I saw some comments from Bessent. One was that the dollar is not weak, he said, against the other currencies. He said it's the other currencies that are strong, which is a bit misleading because, yeah, it doesn't make any sense. But I wanted to show you, and I'm going to show you later, a chart comparing the dollar index to gold since the inception of the dollar index in 1973. And before we do, though, I found a really good article. I've never heard of this blog. It's called Sherwood.news, but they had a really good article, fresh article on this Bessent comment. And it says, sorry, Treasury Secretary Bessent, it sure looks like we're living in a weak US dollar world. So let's go through it. It says, Treasury Secretary Scott Bessent made an interesting statement to Bloomberg's David Weston earlier this morning. That was yesterday, Friday, the 23rd, when asked about trends in the US dollar. That is, trending lower for those who might not have been paying much attention. And this is Bessent saying, this is a quote from Bessent, on many of them, I wouldn't necessarily characterize it as a weak dollar, he said. I think a lot of this is other countries' currencies strengthening as opposed to the dollar weakening. Well, the writer of the article says, of course, everything in currency markets is relative. A fraction requires a numerator and a denominator, but there are ways to try to tease out whether this is a case of other currencies being strong or the US dollar being weak. And the evidence points to the idea that the market regime we've been in during the Trump administration, and a little before that, to be more fair and precise, is that of a weak dollar. The US dollar is down against every G10 currency since President Trump's inauguration on January 20th, by as little as 3.5% and as much as 16%. Crucially, the US dollar has weakened, listen to this, much more versus gold, the classical alternative currency store value that it has against anything else. So he's saying, yeah, the dollar has depreciated a lot more versus gold, and that is a weak dollar, and that is devaluation. The only way to devalue really is via gold. But the other thing I would say is that these devaluations come and go. Some countries will devalue quicker at some point, and this is the US's turn. And this article brought up a really good chart. It says this is what plain old US dollar weakness looks like. So percentage change in US dollars since Trump inauguration. So they've got the blue line is the euro, the red is the yen, the purple is the Swiss franc, gray is Canadian dollar, green is Aussie dollar, orange is British pound, and the light green, like the avocado color, is gold. Look at how gold is really outperformed all the other currencies, and that's why gold is also up in terms of other currencies. So other currencies are also being devalued, which sounds doesn't sound right, but versus gold they are. I said I wanted to bring up a chart of the dollar index and gold back to 1973. The dollar index was created and it started being measured in 1973, March 1st. And the reason they did that is because the dollar system, the Bretton Woods system, collapsed. And instead of having a fixed exchange rate regime, we went into a floating rate regime. So the dollar had, this index measured the dollar versus the major currencies. At the time, they were the legacy European currencies. Now the euro makes up like almost 2/3 of this index. But the reason I wanted to show you this is because it shows how true devaluation works. It's not against the other fiat currencies, it's against gold. And this chart here proves it, because in March of 1973, the dollar index started at 100. And yesterday when I drew this chart, it was at 99.16. So an insignificant drop, basically in 52 years. While gold was trading under $90, and yesterday it was, when I drew this chart, it was at 3,360. So that's how they do it. And that's why they don't want the public in gold, because you protect yourself and this whole Ponzi fiat currency system would end. So yes, if you really want to destroy your savings, hold on to fiat dollars, fiat pounds, or whatever. Buy government bonds and keep cash in the bank. Yeah, that's what this is telling us. So now I want to talk about why gold could go to 4,000 by the middle of October. And I don't really like making forecasts, but sometimes, yeah, I'll stick my head out there and do it. And the way I've done this is looking at the past, at this weekly chart, going back to the beginning of the year. And we started the year around 2,600. And we went up almost in a straight line. Yes, there has been a bit of volatility, but by the middle of April, gold had reached 3,357. That was the high. So let's say from 2,600 to 3,300, $700. And ever since middle of April, though, we've been in a consolidation, pretty choppy, basically between 3,200 and 3,350. But as you can see here, we made an all-time weekly closing high in gold yesterday. And it looks like this consolidation could be over. And that's why I think what we're going to see now is similar to what we saw from January to mid-April, and gold could go up around $700. So you take 3,300 plus 700, you get around 4,000. And that's why I think we could go there. As for silver, the chart also looks pretty bullish. Yes, we're right around that 100 to 1 gold to silver ratio, still really high, but the key level in silver is really clear. And the bullion banks are gonna, Yeah, they're gonna protect this level to the death, so to speak, and it's 35. But once we break 35, I think we could see a major move higher very quickly in silver, and I expect silver to catch up and overtake gold eventually. So there you go. Just one more story that I saw that I think might be interesting for my viewers in Australia, and I'm sure you know about this, is the fact that the new Labour government there is thinking of putting a unrealized capital gains tax on supers. Supers are just the private pension system in Australia. Everyone's that works is obliged to have one. Of course, this would be for accounts with over 3 million Australian dollars. So how it would work is if you start the year with 3 million and by the end of the year it's at 3,300,000, you've made 10%, they will tax you on that 300,000. So you're going to have to send a big check to the tax man there. So it's a wealth tax, but this is just like a probe. I would say it doesn't mean they're going to do it, but it just goes to show that Australia, the UK, even the US, the EU, these governments are desperate for revenue, and they're going to do whatever it takes to take your wealth away, because governments, of course, don't have any money. And I do have to admit, maybe the Trump administration isn't as blatant, but that's what devaluation and debasing the currency is, the same thing. It's a kind of wealth confiscation on the sly. Very few people notice. I think it was Lenin who said that yeah, inflation is something that very few people understand. Only 1 in a million do, and it's a way to basically destroy the bourgeoisie, and that's what's going to happen, unfortunately, with these continued policies. Yes, with that, I'm going to wish you all a very good weekend. Take care. Bye.